All right, good morning. Comment allez-vous? How are you? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis. I can also do fundies if you want. Just let me know. You are the boss. Today we're going to cover gold, oil, and Bitcoin, and any Forex currency that you want. Just complete the poll over there on the in the chat area. Let me know what you want me to cover. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Good morning. How are you? My name is Wayne McDonald. I've been trading currencies for more than 20 years. I also have a background in commodities and current as well as currencies. We can talk about, like I said, gold, oil, Bitcoin. Fill out the poll. Let me know what currency you want me to cover. So if you chose, I don't know, CAD, then we'll do dollar. We'll do CAD dollar or dollar CAD. We can do CAD yen, CAD Swissy, CAD euro, whatever, all that kind of stuff. So let me know. Complete the poll. Okay, that's it. Well, I'll do whatever you want. I'm here to serve you. I am a servant in our relationship. That's weird? It's kind of like... Anyways, hey, look, if you want a foreign exchange broker, and we all want one, now, or we all need one, Traders Way also offers like metals and energies and crypto and stock indices. But here's the bottom line. Most brokers make money by trading against you. Traders Way actually provides you a quality service. And they have a competitive spread or an ECN fee. But that's the bottom line. If you want a symbiotic relationship with your broker, I recommend tradersway.com. You should check them out. Rolling, rolling, rolling. So, all right, gold, oil, Bitcoin. You guys ready? Did you click the thumbs up button yet? Okay, I'm going to start with gold, oil, Bitcoin, and then I will cover the currency pair or the currency that you want me to cover. Now, I gotta start with WTI. I'm telling you, I gotta start with my WTI. Holy smokes, eh? Dropped another bark just in the last hour. So let me actually change this template. I'm sick of it. I'm sick of it. I want to show you where we are actually when I switch over to the Confluence, and then I gotta update it. Okay, look at this. Holy smokes, eh? Okay, we are on a key price. This is a key price. This is a key price. Holy smokes. And this is an OOP situation. Well, you know, if you go to Investor Bootcamp, Investor Bootcamp teaches this. This is an out of position trade. And in this case, you ride the 4-hour 21, you hit here, and now you red, how do you say it? Shields up, red alert. That's a massive bearish profit taking zone between here and here, in particular because it's the 8th of the month. I don't know. I'm not ready to say up, but if you were a bear, this is a massive profit taking move. Now, what we don't know is if it's going to continue down, but what I can tell you is the probability of up. The probability of up is exponentially higher than just, I don't know, yesterday. Okay. And okay. You know what I mean? So be careful. Be careful. What, again, profit taking. So this could go up, let's say, the rest of the day and nobody's actually buying. It'd just be bears getting out of short positions, right? And then you would assume something like this if you're a trend trader. What I'm trying to tell you on top of all of that is that in scenarios like this, it's even a higher probability of not just a pullback, which is normal, right? Like the down, 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 up, up is a pullback, down, 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 up, up is a pullback, down, 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 up, up is a pullback, down, 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 up, up. So you think this could just be yet another pullback, right? Not in this situation. Okay, so I'm not saying reversing up, but the probability of that is extraordinarily higher than all the other pullbacks. Okay, cool. If you're like, you didn't know that, or you're not quite sure what I'm talking about and you want more Investor Bootcamp, Shameless plug, right? It's $88 for 88 hours. I mean, dude, come on. So check that out. All right, so we did oil. Let's do some gold. Gold is held up on a weekly. Okay, you can see that. And the next kind of thing is it might just be hanging around. Might just be hanging around and slowing down. Obviously caught up on the weekly pivots. And so I would still look for this roll reversal. The biggest thing, of course, is this was all predicted ahead of time based on the idea that there's 3.8% inflation minus 4.9% productivity. That's a negative number. There's no inflation in this world. There's no inflation in this world that needs to be hedged because productivity is higher than inflation. Okay? That's my real terms. Okay? My real terms. So if there's no inflation to hedge, you don't need gold. Now, you might need gold later when inflation stays. Let's say inflation drops all the way to 3.5% in the near future. I think GDP is going to drop from where it is now, 4.9. It's going to drop to like 1.9. That's my guess. Okay? And so that's a positive number, and then we'll probably have to buy gold back. So think of it this way. I like it at gold, but not at this price. Gold should fall maybe for a couple of months. If you want to know when gold rallies, you should visit quantbox.co. That's another company I own, and that's another shameless plug. Well, if you want to know, it's already been done. Right, Leon? The work is already done. We already did it. It's already been built. All right. So anyway, so gold, oil. Oh, we got to do biddy. Biddies, can't you see? So over the short run and over the medium run, nothing's really happening, but it is slowly bullish. So let me zoom in. Slowly bullish. If you want to try, okay, you want to try to keep Bitcoin above the mean. And so what you're trading here is the idea that you're going to stay in the upper quadrant. Okay? Paul says, let me see your question, Paul. What and how does roll reversal impact a shrinking economy at what time? Roll reversals are simply technical analysis. Going from support, and then later on support becomes resistance or resistance becomes support. It's a technical thing, Paul. Your question, impact a shrinking economy. It doesn't impact at all. It's just price. It's just technical analysis. Technical analysis is just price and time. That's it. How does it impact the economy? It doesn't. The economy impacts it. But even then, let me explain it this way. You know, how does it impact the economy? The economy is sort of the why. It's the fundamental. Okay? And roll reversals are the what. Okay? Meaning it's simply what the market participants are trying to do to make money in this situation. And very often, the market is trying to think 6 months in advance, where quantitatively, when you analyze fundamentals, you just have the data set now. You know what I mean? I mean, I'm not explaining it well. There's a difference between the market and the economy, and you're mixing them up. Okay? That's all. So if you're a technical analysis, this used to be resistance and now it's support. Okay? How does that impact the economy? It's not. But when you're looking at the economy, okay, now that's a macro issue. You're trying to decide, let's say, is it expanding or contracting? Are people investing or are they hoarding? Okay, so it's a risk on or a risk off type question, for example. And in a risk on world, let's say, if you do your macroeconomic research and you say we're in a risk on world, then you might say you are interested in owning Bitcoin, even though it's not actually money. You might believe in it as an asset, or in a risk-on world, the US dollar tends to weaken, so therefore anything priced in dollars would go up. And once again, you might consider Bitcoin as your alternative investment, and therefore you will buy this role reversal. But the role reversal doesn't create the market. But maybe market, in particular, not just today, but over the market, the expected market in the future, creates the risk on, risk off. Anyways. So if you're trading gold, Bitcoin, you want to keep it in the upper quadrant. The green is obviously a buy zone. The trend is obviously up. And the next target there is probably 36 and some change. Okay? Rolling, rolling, rolling. Yep. All right, so please fill out the form. Please post your vote. What do you want me to cover next? The choices are euro versus everything, pound versus everything, Aussie versus everything, CAD versus everything. What do you want me to cover next? You got 30 seconds. Henry, don't type it. Vote. By the way, while you're at it, please click the thumbs up button. All right, 15 seconds. I'm going to cover it. I'm going to cover what you want. Right now, euro's the winner. Great British Pound, close second. What do you want me to cover? I'll cover that currency versus everything. All right, 4, 3, 2, 1. Kick busted. Boom, 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 boom. All right, 41% euro, 26 pound. Everything else is chump change. All right, so let's do the euro. Thank you for your vote. Thank you for clicking the thumbs up button. Let's go here. Let's go. Rolling, rolling, rolling. Okay. First of all, that is the projected high for the week. We hit it early in the week, and it's come down into the zone. Now, here's the thing. For a trade like this, very often you can go as low as that. So I'm going to put this as a reasonable possibility. I don't know about probable, but possible. Okay? This euro, even though I know you want it to go up, is possibly can go as low as 105, 106. And then we'd readjust. Right now, the range is in here, okay? But here's the thing. In this particular situation, when you buy down here, your target is up here. We hit target. We hit it on a Tuesday. It's done. Done. Done, I tell you. So your plan A would be to try to kick it off the top. This is called a roll reversal again. Okay? We were talking about this in the last currency. And so I would call this plan A, where today you're going to try to take it north and get even higher. Plan B is the one where we drop down in here. So this is plan B. This is plan A. And plan B is not likely to be today. Okay? So when you're looking at euro dollar, just realize that you're in that zone. Let me do it this way. And you're going to analyze this as a giant, big, fat maybe. Drop into a 15-minute chart, perhaps. Okay? And there's your double bottom in our support zone. And now you're waiting for what? 15-minute 21.55 cross up, or a 5.8 cross up, or even better, let's say you don't use any moving averages. If you were thinking about being a bull, you certainly wouldn't do it now. But what if you observed a high higher than this high? So now you got a trap, a trap in a trap. Okay? You've trapped the right side of a double bottom in a support zone on a 4-hour between the two moving averages. And then if you get the higher high, you're going to take the higher low and game on. You're on your way to not just 107. So you'd be buying it at 106 and a quarter, 3/4, I should say. Maybe if it does that. But here's the thing. You can day trade it for 50 to 100 pips, but your actual target would be 108. So you'd be buying it at below 107, going for 108. So really, I think there's about a hundo, right? There's about a hundo in this one. Okay. By the way, which crosses and pairs do you want me to cover with euro? Euro pound, euro cad, euro Aussie, euro yen, euro what? Euro what? Let me know now. Just type it in. Euro what? And I'll do my best to cover it. All right. Euro Aussie. I got in a fight with a viewer last week. I don't fight's too strong. But anyways, I'm like, why the hell would you want to trade Euro Aussie? And then someone else backed that person up and said, well, it's got the, the highest average daily range or something. I'm like, yeah, but who cares? Because it's got a big range going nowhere. That's called volatility. And that's not even the good vol. So anyway, so we had a bottom and now we have a top and still really not really going anywhere. This is the annual projected top. So in January, by the way, it's November. In January, we said based on that bottom, that's the conservative target. Literally, the conservative target for the year. Okay? Now, there is an aggressive target. There is one. There is one. Okay? Right there. So it really depends on, do you believe this trend is going to continue? In fact, let me get rid of it. That's too subjective. Let's just analyze this. Okay. There she be. Okay. I can go further back if you want. All right. So do you think we're going to get there by the end of December? This is what you're going to think. This is going to work its way up. It's got to make a higher high. It's got to get through this crazy resistance, probably do a dipsy-do, and then up. Okay? And that means bad news bears for Aussies. So really, this is China in my humble opinion, right? Okay? What do we know? What has changed over the last few weeks? Well, Australia raised interest rates. Inflation is higher than they projected. They raised interest rates, and I don't believe they can anymore, so that process is done. So now Aussie can't raise. Their economy is in trouble, and in particular, their largest customer is in trouble. Now, so they have raised interest rates, and that's what this move down was. From the mean, it came down when they raised, or when people realized they were probably going to raise. The other thing going on there is in that period, and again, I'll sort of highlight it with my drawing tool. In this sort of period in here, import-export data out of Australia improved. They went from importing more than they exported, which is bad, to suddenly exporting more than they imported, which is good. But then again, if the negative data out of China continues, and one of the things I looked at, even just yesterday at Investor Bootcamp in our swing trading group, we went through the data from the Chinese Association of Logistics, and we looked at some of their data, and it's contracting again. It was really bad, then it was less bad and less bad, then it was slightly positive, now it's bad again. So if that continues, Aussie in general could weaken. And maybe we do get to that annual, just because they can't raise anymore. And then the third point I want to make is I believe the next time Australia throws out a GDP, it's going to be 0.0. So that ain't good, and which means they can't raise any more. So you could be one of these traders. And the flip side of this is if you want euro to go that high, you need the dollar to weaken, and you need the US stock market to rally, and you need the German stock market to rally. Yep. All right, cool. Swissy. No, CAD. All right, CAD. Kitty CAD. I'm worried about this one. Oops, didn't mean to do that, but we'll do it. I'll leave it there. This is what I wanted to do. I'm worried about this one with oil potentially, maybe potentially being at a bottom right now, because I showed you before that oil is on key support. I wonder if this will roll over. Not that it's going to, but if, you know, the one scenario I would look at in the near term, meaning in the next couple of days or something, if it was going to fall, okay, if CAD was going to get strong, it kind of has to do it now. So it's not that it will. I'm not saying that, but this would be the price, and we would call that a double top, but it's more than a double top. It's a double top on an MM3. And if that holds, then the target is MM1. And so it's more like if it shows signs of rolling over here, it's technically significant. And most likely oil would be rallying, and maybe even gold would rally again. I don't know. So watch your commodities, but that is a double top, which means, I mean, look, here's the other thing, and I guess I need to say it. It looks like the average price and the slope of the average price, oops, once again, wrong one. Okay, the average price and the slope of the average price seems to be up. But you can't buy it at a double top, son. So even if it is bullish, that's why I'm like, well, it might turn bearish, but I mean, look, you can't do it now. Okay? You're supposed to buy the dips into the moving averages, which was Friday, and then maybe a dip on Monday into the 21. So now if you're a bull, you just have to wait for a higher high, and then you buy the higher low. And the cool thing about waiting is you want to wait anyways, because this is a potential for a reversal. Cool. So either way, you're going to get a better price or avoid a loss. Winner, winner, chicken dinner. Don't trade it. Okay? Sweet. What else? Euro Swissy. If the Swiss franc is weak, it's a risk-on world. And right now, oh my God, what? Okay? So, so let's take a look. Higher high, okay? You want to buy higher low. You want to look left. You can assume maybe somewhere around there. So, higher high, higher low, buy. Up, 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 down, down, 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 buy. Up, down, down, down. Uh-oh. Okay, so you got to be careful here, because now it could wimp out on you. What? So is that risk off? Is this going to be a risk off day? Is the stock market going to fall today? Oh my God, that's kind of what this is saying. Okay, we have a Jay Powell speech, and he might tell us all those rate cuts early next year that the market's trying to price in. He's going to burst your bubble and say, they've never said it, they've never discussed it, that probably won't happen. They're going to raise interest rates and keep them high all next year. And that could bring the stock market down today. Yeah, really could. Hey, have a nice day.